Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, I want to start with Fred Couples, the famous golfer. He said, voting for Kamala as if she won't continue to screw things up is like expecting a 30 handicap to go out and shoot a 70. It's not possible. Folks, I want to talk to you about Kamalanomics. That's the new buzzword that's out there. Since there's really no agenda that's been stated, we know 3 tax proposals that she's made. I talk about on Hidden Wealth Radio this weekend. And I want to bring you up to speed on what the 3 under Kamalanomics are. Now, 1 leads the charge that's kind of tied into raising the corporate tax rate up about 40% from 21 to 28%. Now, remember, Trump took it from 35 down to 21. She wants to now take it back up to 28. And this is another form of tax because when you have a corporation have to pay more tax, they pass that additional tax cost on to the consumer in the cost of goods. So the idea that the borders are, and now the inflations are, right? Now she wants to do something about price fixing and don't let these corporations take advantage of us. Now she wants to raise the corporate tax rate, which means that corporations are going to have to raise their prices. And that's on top of then removing competition by basically doing price fixing, which didn't work for Venezuela, Argentina, or the Soviet Union. So at the end of the day, this is why they try to keep her kind of in the Biden basement, because the more she talks, the more she gets herself into trouble. The second of the trifecta, or the key 3 to Kamalanomics tax catastrophe, is raising the capital gain tax rate is high, being the highest capital gain tax rate in history, to 44.6%. This is where, just very quickly, abolishing the Tax Cut and Jobs Act. That's why I've talked to a lot of you. And I want to encourage you, because now it's just a call to action to find out what you can save while you still have time this year. Go to taxessaved.com. That's taxessaved.com. Now, the spaces fill up very, very quickly. And this is for those of you that are high taxpayers or trying to avoid having to pay high tax. Maybe you got highly appreciated assets. I'll talk about the capital gains on the unrealized capital gain tax, which is the third of the Kamalanomics trifecta of tax catastrophe. But maybe it's a business, maybe it's a portfolio, maybe it's a real estate portfolio. Maybe you just want to get your IRAs converted to Roth. That's going to create a lot of reported taxable income. Or maybe you're just you're still working and or retired and you just have high income and you're looking to offset the taxes on your income, folks. Go to taxessaved.com. It's a very simple site that you can go, request a meeting. Again, who does it support? It supports those that have worked hard and saved hard, that pay either high tax, be your high income earner, reporter, right? Kind of that federal taxpayer, which is not an accolade anybody wants. And I want to show you how to avoid that. Or you're somebody that just says, look, I'm very concerned. I'm even to the point, some of you have shared, being fearful of leaving money still tax deferred, money that's not been taxed yet, with the uncertainty of how much higher taxes will go for you to get that money out. This is a crucial year, folks, because she's already proposed abolishing the Tax Cut and Jobs Act a year sooner. So this is really the last year if for some reason she makes her way into office, which if there was ever a year to do something to try to win an election that you have no business winning, this would be the year to do that, sadly. The third, so far, raising the corporate tax rate and also price fixing corporations, which means you're going to put people out of work, you're going to raise prices, and you're going to reduce competition, which means the companies we're trying to invest in that support our retirement accounts, that provide an income that we can generate, are going to be impacted. Number 2, raising the capital gain tax rate to as high as 44.6% for gains, as of now, we understand, of $1 million or more. And then number 3, taxing unrealized gains. What does that mean, Chuck? So if you have a gain, and I talk about this on Hidden Wealth Radio, folks. Don't miss this, because I give you the history of the lend, borrow, die. What the ultra wealthy have done to avoid taxes is being taken away because they don't feel that ultra wealthy are paying their fair share, even though they obviously employ most of America. But in this particular case, if you have a gain, your account just goes up. They want to tax it 25%. Even if in the new year, it all gets lost again, they want to tax it 25%. And the question becomes, where are you going to pay the tax from? Well, you're likely going to have to go get into another account that's going to be taxable one way or the other to pay the tax. So now you're paying tax upon tax. And then guess what? When you trigger that extra tax that goes against paying the tax, you now can tax your Social Security higher, your Medicare higher, and push you potentially into a higher tax bracket. Folks, Kamalanomics is not going to work, and I want to teach you how to protect yourself from it. Taxessaved.com, taxessaved.com. Again, If you pay high taxes, want to stop that, or if you're concerned about getting hit with a lot of tax because you want to get your money out of the tax system, don't delay. Don't expose yourself to Kamalanomics. Let's pray she doesn't get in. But folks, even if Trump gets reelected, the taxes have to go up, just because the cost of living is still going to continue to go up before he can get his arms around it. And on top of that, we all need to spend more, right? Because everything costs more. And that's not going to come down for a while. Taxessaved.com, taxessaved.com.